2020, and it's 10 a.m. in London when we're doing this market update. We're going to take a look at the markets, and as always, if you do have any questions, you may put them in the chat box over here. Okay, good. So let's get going. And I decided to look at the euro from a 30-minute time frame today, and the trend is bullish about 130.34, which is this level here. So if you're interested in scalping and stuff like that, if we revisit something like 110.92, then this is where I think people are going to be buying. I did this analysis actually already at 7 a.m. So maybe misjudged how low this can go. So I'm going to lift this a tiny bit and then do it like that. Okay. So if we go down here, I think people are going to be buying again. Now in the longer run, it's not the time to get excited about this market. I think over the next few weeks, we're probably going to roll over where we are, as long as you're below 112.38. I think yesterday I mentioned this level here, 111.70. So this is prior highs, 200-day moving average. Not that it's very popular in the FX market, but around this level we can have a rollover. And the reason for that is that we know that the move in the euro has to do with the fact that people have been hedging. We don't know for a fact, but I think they have been hedging their flows. So you got people taking loans in euros, and then because the interest is so low, and then when things get a little bit panicky, they will hedge those bets, and that lifted things to the upside. That's what I think makes the most sense, because the epicenter is right now the center of the current second leg of the crisis is in Italy, and they have strong growth of cases as well in France, Germany, and I think this can, if it's going to hurt anyone going forward, it's going to hurt Italy, Spain, and Germany, and the euro area in particular. We of course have the situation in South Korea as well, but I think the number one reason why things have been going down is because of the situation in Italy, and the possibility that they might shut down France and Germany. But what we're seeing in stocks, in particular in the German DAX, is that the market is bottoming out here, and this market looks to be heading higher. So we have the big picture level, which is 11,377. The trend is bullish above that level, and you can also work maybe even with the low here from this week. And I think if we do revisit something like the lows here, then some people might look to get involved. You might say, well, the coronavirus crisis. Well, I agree. That will come back. That will hurt the economy. That will spook people. But right now, they're not shutting down complete cities in Europe, which I think they will do, or complete countries in Europe, which I think they might do later. And what's happening here is that, you remember we were going down and down and down, and everybody's like, oh, what's going on? What's going on? You know, is it because of this? Is it because of that? And then we had, I think it was just going down in a reaction to what we already knew, because, you know, from what I've been speaking about, we already talked about how bad the situation was and how bad it could turn. So I think it was just people just going towards that baseline, and then you had very bad numbers from China, and the markets did not slide, and that's an indication that everybody just got a little bit too bearish at that point. And technically as well, talked about it before, this is a very sharp drop. It's not typical for the markets to drop this much without bouncing back. So I think we can go up a bit, first fib, maybe 50% correction, and then we'll see what happens here. If we go up and then suddenly the news feeds start to tell us again that the situation is turning bad in Europe, then probably going to revisit the levels. But the way this looks right now, unless something big happens, I'm going to be bullish. So by big is a doubling of Italian cases again in a very short period of time. I think last time I checked it was 1,700-ish, like total count, excluding people that have recovered. And if that goes, 3,000 or something like very scary, you would see this. I think we can slide. And what you can do, you can look at the markets. This bottoming out, euro dollar potentially peaking. That makes perfect sense. Well, we added, let's talk about stocks, and this is your S&P 500. And the S&P 500 has now reached the sell spot in this market. So you remember this was support, this is resistance now, that is 31.87. So if you think, Alex, you're wrong, I think already today or so things are gonna turn bad, or maybe over the next few days, and you're bearish and you want to exploit that view, then this is where you want to be selling. Myself, I was long the Dow. I bought the Dow effectively down here at 25,000 ish, and I actually booked profits yesterday at the first fib. In the case of the Dow, I still think it can go up a little bit higher, but as with the Dow and the German DAX, I would prefer to buy them on dips. If we go back to currencies now, this is the GBP versus the USD. And a few days ago, we said look to sell here, exactly here at 29.61. We reached the first profit target. Yesterday, I said people are probably going to sell at 128.43. If we didn't touch that level, actually, I had it slightly higher, actually, and we didn't touch the levels. Today, I pushed this level down a bit, and I also tightened up the trend defining level to 129.55. And I think we can go up. I think people are probably going to be selling here, and they're probably going to go down again, because you still have this big triangle, and we haven't touched this level here as well. I reckon that the UK is good. UK has its own. It's an island. They can close the borders relatively easy if they wanted to. I guess they can impose things. Actually, when I think about it, it's still part of. They're in the transition deal within the EU, so maybe they have limits, but they've never been part of the Schengen, as far as I understand. I mean, I know that for certain. So maybe they can impose more stricter measures at the border. However, I don't think the appetite for that is very strong. I do think that the Americans and President Trump, he has no problems shutting down the border. We'll see what happens in America, but I do think that maybe the Americans could be shielded more than potentially in the UK, especially as the proximity is so close between UK and the rest of Europe. So maybe that can weigh a little bit on this on the GBP as well, its proximity to the rest of Europe. As for the dollar yen, so yesterday I wanted to see how things were going to play out. So this is a bullish candle we saw yesterday, first bullish candle in a while, and I do think we maybe have stabilized here. And because I do think stock markets may go up over the next few days, I think we might have a case where this might go up maybe to 109, 109.50, as long as we're about 106.46. So that's something to consider. I'm not extremely enthusiastic about this one, but the market is bullish, and as long as you're about 106.46, I think we can go upwards. These are gold prices, and gold prices are bullish as well, about 1534. This is the trend defining level. You have the 200-day moving average at 1483, and I think if we revisit something like 1569, then some people might be buying there. As for crude oil, so crude oil just reached the sell zone. Remember, a few days ago we said look to sell here for this to go down. That went really well. The market sold with about some 10%. This market is now up with pretty much the same amount, and as long as you trade below 51.73, I'm going to be bearish. If you recognize or remember from yesterday, that trend defining level is slightly higher than it was yesterday. Sell zone, I think, is slightly lower. Okay, we're going to take a look at Bitcoin, and then we're going to see if you guys have any questions. So this is your price of Bitcoin. We saw some interesting price action in some markets yesterday, but I haven't seen like any major changes here. I reckon this was a major high in Bitcoin, this level here at 10,500, and I reckon we can probably trade sideways between something like 6,367 and this high for longer. If we revisit and take out the highs, then maybe we'll take out this big triangle, but it's not looking very encouraging. Okay, let's see, guys, if you guys have any questions. So we have Mauricio say good morning. Good morning to you, sir. I hope you're doing well. And we have Indian stuff. And then we have Civic RSA. And he's asking about the Euro Aussie. Let's take a look at the Euro Aussie. I think we looked at the Euro Aussie yesterday. Yeah, so this is the Euro Aussie. So this is my channel for the Euro Aussie. It's been working relatively good since 2018. And I actually had an idea here that I didn't share with you guys because I do quite a lot of analysis on other places as well. Anyway, the idea was to buy here for this to go up here and then extend it above. Now, what happened overnight in Australia is that they cut interest rates. Why did they cut interest rates? Well, they cut interest rates because, and let me just load something different here. They cut interest rates because they think, well, their economy is strongly linked to China, and that's why they want to help the economy. So they cut from, I think it was 75 basis points to 0.5%. And I think the government said that the banks should pass on the full rate cut to the households to support them at this time. And what's happening here is that, remember about the Aussie dollar, we talked about selling the Aussie dollar more than a month ago, or actually, when was it? Well, a long time ago anyway, when the market, let's see if I can actually find it, because I did some analysis here with you guys. We talked about selling when the market was here on the 22nd of January, so more than a month ago. And the market has gone down. And what I think was happening here, a little bit that we talked about yesterday, that the market moved down because in the future they were going to cut. And now we're in the future. Well, this is the future compared with a few weeks ago. Because the markets try to move ahead of the curve. It's the same thing people say the Federal Reserve is going to cut rates in March. Okay, the euro dollar is up. So they're already going to cut. So you need to look if it's priced in. Last time I checked, I think it was priced in. It's the same thing here. That move was priced in. Because that's what we've been talking about over the last few weeks and months. It's the same thing here, where I think that that move was priced in. And the way this is looking right now is that you still have a bit of a bullish trend, without a doubt. Because you have people that say, okay, they cut rates, but hold on, is the situation over with the coronavirus? If things going to go back to normal? There's some suggestions. If you look at, I think they said coal production has picked up in China, so the Chinese economy will probably bounce back. But some people are looking at all of the data, and the market as a collective are saying, hold on, this has not bottomed out yet. And that's why they're keeping it, the currency like it is. And we can increase the trend of funding level. I think we can just leave it at that level here, which is 68.69. Actually, let's push it down here. 68.38. It's not a huge difference. And if you think the situation is going to worsen, then you're looking at buying like that. On the other hand, if you think the situation will improve, then you're probably going to look for that, the break to 68.38, or better, maybe you'll gain some exposure in the dollar yen, or even better, maybe you try to get on board on some of the stock markets as they race to the upside. So what do I think? I think we'll see a bit of stabilization, as I said before. With stock market stabilizing a bit, I think we can have stabilization for a few days. But in the way I operate with currencies, that as long as the trend remains bullish, which it is here, then I will also remain bullish. So as long as you're above 68.38, I will remain bullish. And instead of selling up here, some people might say, okay, Alex, it sounds like you think it's going to go down. Yeah, I think it will probably go down. So why don't we sell at 71? Well, the problem with selling at 71 is that you will be trading directly against the trend. And currency markets are very unforgiving. They will trend and they will have very strong trends for a long period of time. It's not like stock markets. Stock markets, when they decline, they go up like this, and then when they decline, they go down a lot. But then, yeah, it will usually bounce back up. So you can buy dips in stocks, but you can't. It's very difficult to sell stocks at the highs because normally they just go upwards. It's only if you get it perfectly right. I think 70% of all years end with a positive return for the last 120 years. So you're not going to be betting against 120 years of history. At the same time, you wouldn't be betting if you buy in dips in stocks. The problem with currencies is that they will not have a long-term bias. If we look at something like the Euro Aussie, It's pretty much around the same levels it was in 2000 and, sorry, 1993. So stuck within this big range. And sometimes, like here in 2008, the market went crazy to the upside. And then after that, after the financial crisis, it slid with 44%. And you can have some very, very strong trends. And that is why I wouldn't be selling here. So we got a question about palladium. Let's take a look at palladium. So this is palladium, and palladium is ultra strong, and it's something that I missed out this totally. Now palladium, I don't think there's no real sort of let's not look at the fundamentals. I think everybody knows that something that goes from $600 to $2,500, there's just has nothing to do with the fundamentals there. So this is just your Bitcoin of the last year or two. You see it as super strong bullish trend, and everybody's just buying because it's going upwards. That's the way I would look at it. I wouldn't be looking at fundamentals at all. There's probably some fundamental argument for why it's going up, but why did not everybody see that? Like, why did the whole thing trade sideways here from 2011 until 2018? You know, fundamentals should surely been evident over these years here, but no one bought it. So I think people here are just speculating, but much like Bitcoin, people just go a bit crazy. So if you look at the 6-hour chart, we corrected to the 61.8% level, and the trend is bullish. It's bullish above this level here, which is 2,400, and we might potentially bottom out here. It sure looks like it. And if you look at this from a 30-minute, I don't know if it's gonna be enough, but you have a little rectangle here, which you can keep an eye on. Maybe if we take out the high, it could be the beginning, but I'm a bit skeptical because I think it could be, we'll take out the high and then it goes down, and then maybe it'll bottom out at low levels because you have this. That's what I think is going to happen. It might go up a bit and then down, and then we'll figure things out, because this is still quite steep, this whole thing. So it needs to let it trade sideways for longer maybe, and then potentially you can work with that. Okay, we're going to wrap things up. So guys, thanks so much for watching. Sorry for starting a bit late today as well. I do see a few more questions here, but unfortunately I need to leave you guys now. Guys, thanks so much for watching. If you do have anything, join me tomorrow morning as well. You should reach out to me via Twitter as well, but I don't usually answer. I can answer some questions, but I don't usually answer them. We'll do like this Indian stuff. We're gonna take a look at dollar CAD Swissy. We'll take a look at that. Because it's more difficult. If you write to me on Twitter, it's much more difficult for me to reply than here. All right, so this is your weekly in CAD Swissy, and CAD Swissy is just one of these markets that trades sideways a lot, and I don't really have a strong view, but we're trading within some funny looking big range, and maybe if we trade below 71.20, we might go much lower. If we look now at the daily chart, the market is just here. I think technically we're in some sort of a triangle like that. Actually, let's ignore the triangle. Triangles are terrible patterns to trade. We're within this rectangle thing here. So because the trend is bearish, I think if we take out this low here at 71.20, we might go lower. On the other hand, if we take out 72.09, then that could be the beginning oh, maybe this market is stabilizing. And if indeed does stabilize here, then we might go up to 73 and maybe all the way up to 74 as we go back into the range. Because we could potentially just do something like this. If we trade above the high, it might go up like that, and we'll just go back into this messy bit here. On the other hand, take out 71.20 for I'm gonna trade lower. And this is the bet on the coronavirus turning more crazy and people getting more and more scared. About the coronavirus in general, I think like this. I think there's going to be a situation where at least now governments are letting this grow. They're not going to stop or do nothing about it. And I think what could happen eventually is if things turn more crazy, which I think they will do, there's going to come some political pressure by the governments to shut down their borders. And if they do shut down the borders, then we're going to be in a situation where China, so you see the Swissy gain much more. You see stock markets like German DAX go down with 10% maybe, as we're going to have a big shock to the European economy. Remember, Germany is being very close to recession for the last 2 years. You have Italy as well, not doing good. You have the UK, which in November had like zero growth. So Europe in general is a bit fragile, and if you have a shutdown of the economy for 2 months or so, as they had in China, then you're gonna have quite a few businesses going bust, maybe, and that could again cause stock markets to come off. This is probably gonna be trading much lower, but I think the way the politicians are looking at it right now, they're looking at it like this: that is a normal flu. And I think they want people, so if you get sick, fully. Like if you're a healthy person, or if you're younger than 60 as well, because age is really important. I think they're just gonna say, okay, you got sick, you stay home for 2 weeks, you'll be back at work after 2 weeks. So I think that's maybe what they're trying to do right now. The problem is this though: if there's a lot of people, and then suddenly people's grandparents start dying, then that is when there's gonna come political pressure, when they're gonna say, why didn't we just self-isolate and work from home for 2 months when the situation was small? And then there's going to be pressure on governments, and people want to win those re-elections. So what's going to happen is at that point they're going to close down everything, and some are going to be more stronger than others just to show that they are in control. And that's when the hit to the economy is going to happen. Will that happen? We just need to keep an eye on the figures. You need to keep a look at the markets. Sometimes you see the move in the markets before it actually happens, and that is when you look. For example, if you see euro dollar break into the upside, you see gold going up, you see stock markets going down, you see crude going down. If you see all these things happening, you don't have to see all of them, but if you see big moves in the markets, then that's your sign that things are happening. And in the case of the currency markets, is pound yen lower, euro yen lower, and dollar yen lower. That's what I would be looking at. Okay, guys, have a great day, guys, and I'll see you guys tomorrow around the same time, but hopefully a bit earlier, so maybe 9:45 London time. Have a great day, and thanks so much for watching.